Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Good afternoon. Ira Epstein of Lynn & Associates with your agriculture update for this Tuesday, and this is the first day of August 2017, just after 2 p.m. Central Daylight Time. A bad day in the grain markets for the grains themselves, and looking at them, down 8 in the corn, wheat down another 13, bean market down 35. What happened yesterday is the USDA crop conditions report came out bearish. The market knew that, but as the day moved on, it started feeding on itself. Now, this did pick up the cattle to a certain degree. Hogs didn't respond to it whatsoever, and that's interesting. And you had a reasonable day in the cotton, but a down day in sugar, and even cocoa got hit pretty hard today. Interesting. Energy prices have been under pressure all morning long. We're seeing some support in the crude around the 48.80 level. I know it slipped through there, but that seems to be one of the support numbers, so we're watching that. When we take a look at the bean market on the weekly chart, I'm still at this point where it's gone from $9 up to $10.27 3/4, and this whole pullback doesn't turn it down. It's just caught in that type of overall thrust in the market. But when I go to an area chart of closes, that's a whole different world now. Now you've got a market that's gone from 10.43 down to today's low close of 9.71 3/4. So we've already got a 70-cent break under our belt. You know, if the market wanted to retrace everything, 9.10 is a number that you could consider. When I just look at a chart with nothing on it and I want to get an idea of the thrust on the daily chart, it's gone from 10.47 to 9.69 3/4. The swing line, that's the brown line that you see here, which is so important on charts. Why? The problem for most people is they'll look at a chart pattern, and today it's a pennant, tomorrow it's a flag, the day after it's nothing. It's strange. But if you can do quantitative analysis and apply that to a chart, where if you have a higher high day, a line goes a certain place. You get a lower and low day, an inside day. And you put those rules on, what quickly happens is you get through the noise and you get to see how you're trending. Now, a downtrend is made up of a pattern of lower highs and lower lows, which we have. Therefore, on this chart, the trend is down until you break the pattern at 10.19 3/4. I filter charts with moving averages. And the way I use moving averages, one of the ways, is if a market is under a key average, like the 18-day moving average of closes, and it's under it, I say the market has downside bias. When you get to the 100-day average, in this case it's over it, so I'll say the market could find support at that number. That's all that I'm saying on that chart at that point in time. So now I can look at the market, say some support, some resistance level, one way to look at it. The other thing I look at are a Bollinger Band algorithm. Why? Because this algorithm, excuse me, is built to keep the market trading within it 95% of the time. Therefore, on the first attack to an upside or a downside, that's where I think pros will take some money off the table. That doesn't mean the market can't trail that band down, just like it's doing now, trying to force it. But I do think on the first challenge, which is today, the smart money starting to take money out against that. You know, the gap between the lower Bollinger Band and the 100-day average is only 6 cents. So I wouldn't be surprised if that's what they're doing. In terms of momentum, the market is oversold. In other words, what we've got are two lines that make up the momentum indicator called slow stochastics. The traditional way to look at it is any reading under 80s overbought, any reading under 20s oversold. I view it different. I use a different set of numbers on it, and I consider any number under 30 as being oversold. So I have an oversold market that has hit the first support, the Bollinger Band, second support right under it. I think the pros might take some money off the table, waiting for rallies to sell again. That doesn't mean they give up their whole position, but I wouldn't be surprised if they've done that. I'm going to say the same thing in the meal. oversold condition. You got a downtrend. You are under the 100-day and the Bollinger Band, so that's important in and of itself. You only stay under a Bollinger Band 5% of the time. So if you consider that a day under, like a day over, is one of those percentage points, and that's what I use as a rule of thumb, you got a 4% chance of the market staying under it tomorrow. Doesn't mean it can't. That's the probability that I apply to it. Soybean oil is quickly retracing. It's got downside momentum, but an uptrend. You got higher lows, higher highs. Again, you got over the upper Bollinger Band. How long did that last? Bang, right back down. I'm looking for the price to find support against that 18-day average, which will move up tomorrow. So we'll see how high that comes in. In the corn market, you've had the pattern of lower highs, lower lows. It didn't just happen. You are oversold. Both numbers today that make up the slow stochastic are under 20. So they're getting into the realm of could this market embed. Now, embed occurs when both numbers stay under 20 more than, well, actually several days. Got to be more than 2. And you're not there. So I'm going to look for support on a break to the lower Bollinger Band, resistance at the combination of the 18 and 100-day average. For those traders that look at corn from a longer perspective, if this 18-day average gets under the 100 and prices are under both, be careful. That could be a brand new sell signal in the market. You got over it here, and you can see how the market went up. It has stayed over it since that point in time. If you start crossing down, that could be very bad news for the market. It's one of the reasons I think that some of the feed grain animals are getting bids, because they're looking at low prices again. Wheat. This is what an embedded reading looks like, and as you can see, the market has got the lower highs, lower lows. Notice how the market today made a challenge of the 100-day average, found its support there. That's because other traders look at this. I'm not by myself on it. I just put the pieces together, probably different than a lot. And if it wants to give ground, it could go to the lower Bollinger Band. That number will change when the market reopens, but that's where it's at right now. In the sugar market, you're up to the upper Bollinger Band. You got there yesterday and today. Couldn't quite stay over it today, and you're overbought. I will repeat what I said then. The market's in an uptrend. The bias is up, but overbought. And I think the pros have taken and continue to take some money off the table at Bollinger Bands. In the coffee market, you got up to the Bollinger Band 3 days ago. Now you have an outside day down. So with today's action, if you take out today's high, I think you'll challenge that Bollinger Band right away. If it doesn't take that out, the first support came in at the 100-day average. If that gives ground, you go to the 18. Here's what's countering all that. Look at how many days you're embedding. Today, yesterday, and the day before. You have an embedded reading. Therefore, the pullback in the market is probably going to be viewed by traders as bullish opportunities in the market to get involved. That's how I'll view it until that red line closes under 80. In the cocoa market, it's the same thing. You've got your embedded reading, a huge reversal. You fought for 4 days up at the upper Bollinger Band, couldn't get through it. And as you know, what I would teach is you're not adding positions up there. Now, if on a break tomorrow you get down into this 1999 level and the embedded reading stays in place, I wouldn't be surprised if the pros are nibbling on the long side. Lose the embedded reading, get under 80, and I think they'll say you've got a better shot of going back to 1965. First, obviously, you got to get through the 100-day average, but that could well be what this market then tries to do. It's in an interesting part on the chart. The trend is still bullish, the bias is up, and momentum is locked in. Going to be a very interesting day tomorrow in it. In the cotton market, you have the swing line down. You've got lower highs and a lower low. Obviously, as the market broke today, it got within 8 points. Today was 68.23 of the 18-day average at 68.15. You are overbought. The market is stuck in these Bollinger Bands down to the 18-day average of closes. I don't see a thing on that chart. In the cattle, you got a nice bounce, but you've been in a downtrend. Lower highs, lower lows, but very oversold. What was support on the way down, the 100-day average, is now resistance on the way up. If the market can clear this right here, this I believe it's 115, looks like 02, Then maybe you get to the 18-day average and restructure the chart. I don't know what else to say with it. In the feeder cattle market, this was the sell zone today, I think, for a lot of people at the 149.80s. I think they'll bail on those trades if you get over 149.92. Momentum was oversold. It's corrected that. The bears have to defend their position. So let's assume you take out that 149.92. You would end up with no trend. You'd have a lower low and a higher high. So this is where the bears should be defending their position. In the hog market, it's your first close back under a lower Bollinger Band, and I'm a broken record. This is where pros are probably taking some money off the table. That's what I'll say and continue to say. Obviously, you're not in an uptrend. You're no trend. You have a higher high and lower low. You've had downside bias, but you are very oversold. So that's pretty much how I'm looking at what's going on in a bunch of these markets at this point in time. So what do you do with them? Well, that becomes the interesting trick. What do you do with markets like this? One of the things that we do, let me get back to that, is our chart of the day. Why? You're going to see patterns where you get a move that comes out of sideways action, all of a sudden breaks out, and we're able to predict with our charting technique where the market might head. We give you 5 different points on a chart, but typically the first point, the probability of hitting it is really high once the price count gets going. The probabilities to the second and third count fall accordingly. Getting to a fourth count is very rare. But the key to me is once a price count's activated, it's like a momentum signal. Until it doesn't go up to that first number because it hits it so often, I look at it as a super high probability. We teach you how to work with it. And we send out every day a price chart. So how do you get that? And that's one of my alarms going off on my charts at this point. How you get it is by giving us a call at 866-973-2077. You can visit us at www.iraepstein.com. You can always click right up here if you're watching me on YouTube. You'll see the icon there. And underneath us on a number of websites, it says, click here for Ira's free information. Do so. Fill out the info. We'll get this in your hands. I'm Ira. You have a great day. I will see you all later.